Today I'm going to talk about the most popular indicator of all time, the 20 period moving average. Hi everybody, I'm Sami Abusaad. I'm a professional trader and director of education at T3 Live. Let's get started right away. Here we go. First, a rising 20 MA represents positive market action or strength. A falling 20 MA represents negative market action or weakness. During strong uptrends, retracements tend to halt near their rising MA. During strong downtrends, rallies tend to halt near their declining 20 MA. So when the stock is trending up, you want to play long when price pulls back to the rising 20 MA. Works the same way when the stock is bearish and the price pulls back to the 20 MA. You want to play short every single time it touches or reaches the 20 period moving average. So that's the first thing that I wanted to talk about. The second thing is the slope. 45 degree is ideal, but when the stock and the moving average, which always follows price, when they start to speed up and the trend becomes sharper and steeper, then you know the stock is becoming overbought and a crash is usually close at hand, as it happened to IPGP. Dropped from 240 to 200 in 4 days. 4 days. Here's another example of a stock that was initially in a nice 45 degree uptrend, and then price started to speed up, and of course the moving average followed suit and accelerated, and it crashed, as they almost always do eventually. So we talked about when the stock is in a nice uptrend, you want to play it long. We talked about also the slope, but what happens when the stock breaks the 20 MA and enters into what we call a sideways trend? What do you do then? You do nothing, because at that point the 20 MA becomes a useless line on the chart, okay? With one big exception, which is what I call the halt play. When stocks are about to transition from a sideways trend to an uptrend, the 20 MA will start to hug price and curl up. That's your indication that a breakout is close at hand. So up, down, through the 20, and finally up, and couldn't come back down. The 20 MA captured the price, halted it. That's when you know the stock is about to transition higher. And as you can see here, 254% in just 22 days. I took all these pictures on the same day here, the 12th. Every single one of them. This is my favorite. The halt play is my favorite swing and long-term play. When I play it swing, I go bar by bar. So I end up exiting just under the last bar's low. Right here, 30% in 4 days. 25% in 4 days. 47% in 6 days. And still in it. If you took it, you'd still be in it bar by bar. 43% in 4 days. 39% in 5 days. Notice that moving average, how it starts to curve up. That's the halt. That's the breakout, the transition A breakout. Here's CLVS, 27% in just 1 day. Unfortunately, I played it only as a swing play, and it got to my target in just 1 day. It made $7,600, which was nice, but CLVS honestly went up to $100. I had 1,800 shares, so you do the math. So I missed out big time on this because it went to $100. Here's another example. PTCT broke out in 1 day 30%. In this case, luckily, I was playing it as a long-term play. I took half, made $5,400 on day one, but the stock, it went up to $53, exactly 53 from about 920 or so to $53. That's the kind of play this the halt is. It's an amazing, amazing play. Well. I hope you enjoyed today's video, and if you did, please be sure to hit the like button. Let me know if you use the 20 MA and how you use it. Also, if you want to find out more about my services, be sure to check the link in the description below. Thank you so much again. I'm Sami Abusaad, Director of Education at T3 Live. Good trading, everybody.